Today we'll be talking about the trader who turned a mere $20K into $10 million using this unique system known as social arbitrage swing trading. This is the story of Chris Camillo, the man who is featured in Jack Schwager's Unknown Market Wizards and has a fascinating method of extracting money from the stock market. So what exactly is social arbitrage trading? Now, this is quite an interesting method of trading, as it has nothing to do with price action or fundamental analysis. Instead, trades are based off information and perceived change. Your edge is derived from understanding sentiment surrounding the stock before Wall Street or the general public has. This is referred to as an information imbalance. As highlighted by Biaheza, Wall Street has pretty much every advantage over the retail trader. They have faster algorithms, better AI, more data, more capital, and it's all run by some of the smartest people in the world. This is who we are up against. However, the one thing they don't have is the unique perspective of someone in our age group, someone who lives outside the bubble of New York City and is experiencing the real world. We have the power to spot trends and change on the ground level in the world around us or on social media before they are reflected in the stock's earnings reports. Do you think Wall Street traders are scrolling through TikTok comments on the latest fashion trend? For some more context, here's how Chris describes his strategy.
Social arb trading is about identifying change early, connecting the change to an investable company, and then investing only when there's what we call an information imbalance, meaning the information that you discovered is not fully appreciated or fully known by the market at large for that particular sector or security, right? So that's an information imbalance.
Now, when looking to place a trade, Chris and his team ask the following questions. Will the information move the needle for the stock? Is it actually relevant and powerful enough to have an impact? Are there any other things happening to the company within your trade window that are more important than the information you're trading with? As you can see, they teach that as soon as you have a valid information imbalance, nothing else matters. Don't look at stock price, fundamentals, or the management team. Ideally, the best way to trade is to be blind to the stock's price. However, this is nearly impossible in today's day and age. After entering the trade, they will then close their trade when they've reached so-called information parity, which Chris admits is not an exact science, but obviously it has worked well enough for him. Information parity is when the general market has fully digested and reacted to the information that had previously been in a state of imbalance. I find this exit strategy a bit difficult to wrap my head around, as all of my experience trading is from rule-based technical trading. Here are some more fine details about the system. So Chris has been trading variations of the strategy for over 15 years now. He used to call it observational investing. He generally risks about 5 to 30% of his portfolio per trade, all depending on his conviction about the stock. However, he rarely goes over 4 to 5 high conviction trades a year. When placing these trades, around 80% of his trades are long and 20% of the trades are short. His team utilizes both equities and options to take advantage of the move. This is a very fascinating method of navigating the markets, but how does this approach come to fruition in actually making trades? Let's look at some social arbitrage trade examples. A new trade the team just announced is that they've recently bet $1 million on Crocs. They began their analysis by highlighting a comment by a user on TikTok that went, "I want them so bad, but they are sold out everywhere." They then go to highlight that the number 1 and number 3 best-selling shoe on Amazon for women's is Hey Dudes, which is a brand owned by Crocs. And for men, the data matches as well, with the number 2 best-selling shoe being by Hey Dudes, where Crocs is the parent company. Next, they move on to hard data from Google search trends, highlighting the breakout in the Crocs sandals search term for worldwide data. Then they talk about the potential and the beginnings of the sandal market in China. There's more analysis on their YouTube channel, Dumb Money Live, but I'm sure you get the point of how they approach these trades. This is such a unique way of trading outside of the traditional fundamental or technical world. When asked his thoughts on different styles of trading, Chris has said from his experience, social arbitrage swing trading is probably the best for the average investor outside of those who enjoy the trenches of technical or fundamental trading. My main takeaway from researching this trading style is the mindset that Chris and other successful business people like him have. This is a mindset of constantly seeking opportunity throughout our day-to-day lives. It is an active way of thinking and observing change in our environments. These observations can then present opportunities to make money, whether it's longing a stock or creating a product where there is a need. The most important thing you can learn from this video is equipping yourself with a mindset of increased awareness of your environment and searching for where you may have a financial edge over others. If you're wanting to learn more about this strategy, there is a lot of great info out there on the internet, especially by the Dumb Money Live team and their YouTube channel. I'll leave all of their links below, including my favorite videos from them and their Discord. This video here is only intended to introduce you to this unique style of trading. So comment below, what are your thoughts on this trading strategy? Do you see yourself implementing this style?